Good morning, ladies and gentlemen, and welcome to the Capital Metals Investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today, and we'll publish those responses on the Investor Meet Company dashboard. Before we begin, we'd like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'll now like to hand over to Executive Chairman Greg Marter. Good morning.
Thanks, Mark, and thanks for the time. And welcome, everybody. Thank you for your time. I look forward to this presentation and hopefully spending more time with you as shareholders potentially during our course of getting into construction. We gladly can now say in our presentation, rather than a road to production, that mine construction is underway. Mine construction planning is underway. Normal disclaimer, everyone's familiar with. So what's the opportunity here? So really, for the last 12 months, I don't know if all of you know, but many of you would. It's been a pretty difficult journey that we've had, where basically the previous Minister for Environment was trying to steal our project and give it to a third party, which was flattering because obviously evidence that the project was worth stealing, but it was incredibly frustrating. So what they tried to do is they tried to cancel our licenses and had no grounds for that cancellation. But it set us back and took us a long time. We took many actions. We went with lots of lobbying, through the good connections through the President, through the We took local legal action. We threatened breach of international treaty litigation, which we know very much scared the government, particularly as they've been relying on the IMF to help them with their financial situation. And then we had an appeal secretary to the guy. So that process succeeded. So 2 weeks ago, we won that appeal, and the cancellation has been overturned, and they've been told to reissue the licenses with a fresh date. And interestingly, that Minister for Environment, who was not our friend for the last 12 months, has been kicked out because his own party kicked him out because he voted against their wishes. So the guy that was going to be standing in our way if he stayed in that position has gone. He appoints the chairman of the mines department, which is called the GSNB. He is going as well, as is the Director General. So there's a big clean out, which we're really, really welcoming and looking forward to working with the new management of the GSNB, but also I think partly as a result of what we've done, they've changed the regulations and the Board of Investment, which manages the investment and protects foreign companies that are investing in the country. And right now they need foreign direct investment. And that Board of Investment has a lot more control and a lot more say in how things are run. And that board reports directly to the President. So we're even though it's been a painful 12 months, I think we're in a much better position than where we were 12 months ago. Well, as I said, we've got good connections through to the President. We know the Attorney General's department very well and very much on our side. The Board of Investment very much on our side, and now new management, which will be a hell of a lot more cooperative than the last management. But if not, we can go back through the Board of Investment, as we keep being reminded. So what we've got now is that platform to get our construction underway, which is pretty much where we were sort of August last year, but that's been put on hold for 12 months. So what does that mean? So we've got to start work on all the conditions that are in the mining licenses, and there's quite a few, but most of them are bureaucratic and procedural. We've got to get that as much land access as we can to build out a portfolio of mining licenses. The first 2 mining licenses we've got probably gives us the first 2 years of production in any event, so we're pretty well protected on the early rollout plans. But a key focus is our arrangement with the LB Group, and we signed an agreement with LB in December last year, and we've been talking to them for a long time. years actually, and just keeping them informed. And this led to signing of an MOU in December. And then they came out, did their due diligence. We had a very strong site visit with them in February, where they had all the technical due diligence, and we virtually got through the financial due diligence. There was a little bit left. We'd had comments on a first joint venture agreement, so the definitive agreement. So we got very with us the whole way. So we kept them informed, and then they allowed us to announce the extension of the MOU in May, which we did, and then again in August we extended it, and we extended that to the end of this calendar year. And now we've had several calls with them. We are re-engaged. They've sent back what's outstanding. The DD, the lawyers are engaged, so I'm very hopeful that we can move through that reasonably quickly. My target is before the end of the year. That might be optimistic, but it's good to have targets to keep you honest. Bear with me. So broad terms of the MOU with LB. So they will basically fund the capex required to get to what was defined in our May 22 PEA of 1.65 million tonne capacity. And that we estimate would cost $81 million. They have to fund all of it. We don't fund any of it. We are entitled to cash flow. As soon as it's positive, we are entitled to 50% of the cash flow, positive cash flow from as soon as it starts. So we don't have to wait for that money to go back in. So based on our plans, we could be getting cash flow in 12 months. We do need to sit down with LB Group. They might have a different plan to us. They might want to go harder and faster. They might want to go to a higher production rate. I'll talk about that a little bit more in the back of the presentation. Because we scaled our plan to minimise the cash we needed to get into production, and whereas they, I think, will be driven more by NPV, which for us I think it'll be great. But we'll keep you informed as those discussions move forward. The upside for this company, this project, has never been the issue. It's always been execution. And everybody who's been involved in it, everybody who's been to the project, everybody who knows the industry knows that this is a very straightforward project in a part of the world that needs work. And we've only really fairly early stage in our of the resource itself. The resource only goes to 3 meters. We know it goes way deeper. And our NPVs out of that 22 study equates to about 46p per share on the base case and 70p per share on the upside case. And as you'll see later in the presentation, both of those cases are below the current spot prices. The difference between the cases is basically what we assumed as mineral prices. As I said, you'll see more of that later. I think a big catalyst is going to be signing of an agreement with the LB Group. So we're fingers crossed, and we'll keep you posted. So this is a excuse me, it's a very nice project. It's not global scale size yet, but it definitely is global scale in grade, very high grade at 17.6%, no slimes, very simple processing, high valuable heavy minerals ratio at 75%. So good, easy project with high grade and lots of upside. Our view internally, and we've spoken to people, there's lots of companies that have got interest in it. Some of the bigger ones would say they're not interested until you can get to 50 million tonnes, but most of them agreed with us that we probably will get to that target. That is our target, and so certainly the first initial 10-year mine life we expect to grow quite considerably. So the economics in a nutshell: high margin, short payback. So as I said, that those NPVs, the base case 155 with 56% IRR, and upside IRR of 73, pretty strong. 3.2 to a 3.7 year payback, which is very good in this industry. So what are the key minerals that we'll produce? So most of the revenue will come from ilmenite going into titanium dioxide, followed by zircon. So between the two of those, about 70% of our revenue comes from ilmenite and zircon, and then rutile and garnet. And so, at the moment, I think the forecasts from 2023 to 2030 are pretty strong for the industry. And there's a few headwinds at the moment, just given global uncertainty, some slowdown in construction in China. Some of that's been offset by a bit of a construction boom in India, but certainly the long-term fundamentals are very strong. And over time, Richards Bay has been cut back quite a lot, and that has actually helped boost the pricing across the globe. And as a key point there is we're going to be partnering, fingers crossed, with the global #1 pigment manufacturer in the LB Group. So we've certainly got the right pedigree for that type of partner. So we're now pretty advanced on our path. Key next step is finalising the joint venture agreement with the LB Group. The port lease that we actually had a lease agreement agreed with the Port Authority in Olival, but we didn't sign it because it would have resulted in us starting to pay. So we basically put that on ice, and we're revisiting that now. Engineering design, I know somebody's put a question in there of how long that's going to take to get us so we go into construction. It's a very simple, well-trodden path, so we don't expect that to take long. We're certainly hopeful of starting construction in the first half of next year, and I'm hoping we can start it as soon as sort of the middle of the first half of next year. And then based on, as I said, that stage plan that we had, we would expect to be in production in 12 months and positive cash flow in 12 months for us, for Capital Metals. So as I said, it is one of the highest grades globally. There's a very high content of measured or indicated resource inside that resource, and the revenue split. If you look at the resource content, it's only about 40% in ilmenite and zircon, but that accounts for about 70% of our revenue. There is excellent infrastructure in the area. So there's grid power, there's scheme water, there are sealed roads. The roads will probably need to upgrade a bit between the site and the port, but there's a brand new port sitting 32 kilometres from the initial mining area, and was used for fishing. It was funded by the Danish, but it is over time, through lack of use, that it is actually filled up. You can't see it in here. It's filled up with a lot of sand, so it's difficult to access the port other than very small vessels. So we will dredge that port, which does contain heavy minerals, lower grade than our resource, but there'll still be some value in it. And if not, we'll get a return out of it through construction sand. So this is, for those who know the industry, as I said, it's a well-worn path. So at site, we will have 150 metre wide benches by 50, and that'll be continuous rehabilitation as we go, which the locals are loving the sound of. And so there'll be a mining unit and wet concentrator plant at site. The plan is to have 3 mining units. The concentrator plant will be mobile. And then all of the facilities will be built in stages over time at the Olival port, which you could see from that photo. There's ample room for expansion. In fact, there's way more out the back. There's virtually no utilities there as we speak. So this will ultimately go to HMC moving to a mineral separation plant, magnetic mineral separation plant, then then later on a non-magnetic separation plant, if that's economically justified at the time. But based on our current plans, it is. This is very simple, no blasting, no chemicals, and that constant rehabilitation, which the locals will appreciate, because we will actually leave the beach in a much better state than what it is when we arrive. So it's full of rubbish. Obviously, the heavy minerals itself, so it's dark sands everywhere. So we will get rid of the rubbish, plant as we go, and have returned golden sands. I've just this summarises the staged approach. So we conservatively looked at only doing a 550,000 tonne mining rate, and then the concentrator plant, which we built within the first 2 years, and then we'd moved to the mineral separation plant, and then we're basically upping the tonnage, and then ultimately the non-mag plant. At the moment planned for sort of years 5 and 6. So just touching on the in a little bit more detail on the LB Group deal. So as I said, 50-50 JV, and it will be a proper JV. I've had a lot of experience in international mining JVs with the likes of Rio Tinto and Barrick Gold and Anglo, and so I know what 50-50 joint ventures look like. But there'll be a management team that we will appoint, and that'll report to the JV board. So this is not something that LB will just come in and run themselves, and that's how they want to do it. They want to work on this together. But clearly they're going to have some pretty key input into that construction period. They're all construction decisions, which we welcome as well. So just some highlights from on the side. Taxes and royalties, not necessarily a highlight for us, but certainly is an important factor for the government. We are actually expecting a royalty increase, not surprisingly, since the IMF is in there and has said no tax holidays anymore, and we need to see more returns. So nothing formal yet, but obviously we'll keep you updated as that goes. But I think, as I said before, the upside is not really the issue, and we've still got a fair bit up our sleeve in terms of the pricing assumptions that we've used, which takes us to the next slide. So if you can see here on the ilmenite, our base case price was $250, and it's around the 370 mark. Zircon, we had 1922. That's the average price over the life of the project. Same with rutile and garnet, and they're all below current spot. And we just did some calculations to look at the weighted average of our base case assumptions, and base weighted average is 38% below current spot, and even the upside case is still 11% below the current spot. So I'm not sure there'll be that many projects out there at the moment where even their upside case is below the spot prices. So we did some big auger drilling program in 2022, and none of this is included in the resource. And we really need to spend more money on exploration drilling, but of course we'll be doing a lot of resource drilling at the time moving into construction. So I think we'll be able to do both at the same time. We'll need a sonic rig, which we're at that stage, rather than just auger, which is not as accurate. But what was pretty consistent is we were seeing grades above our current resource grade, and we were seeing it go to some depths that are well below the average 3 meters. So we do expect, as we actually get the funds to move into more resource drilling, that will increase. One thing I haven't said about the LB deal, that there are payments of $2 million up front, but to us would pretty much occur on signing, and then another $8 million that would go into the project very soon after that signing, and we have to hit a milestone for that. Based on our current figures, we will hit that milestone, so funding shouldn't be an issue. As I said, we're pretty keen to get in and do this deposit a bit more justice, that it really hasn't had to be pretty tough time. They got hit by COVID pretty hard, an economic crisis earlier this year, and they're still working their way through it. So it was pretty tough to get things done over the last few years. Things have been slow, and we probably could have had them move faster, but it hasn't been easy for the country. As far as the region, it's a great part of the world. It's reasonably remote. There's not a huge population over there. There's a mixed population, which I think is pretty reflected in the mix that we have in our staffing team. But big picture is that they need work, and so there's a lot of support. We've been working with them, obviously, for years. As Capital Metals, we've been here since 2016. And as the predecessor company that we acquired since 2012. So they've built up some pretty strong relationships. So we expect to add over 300 jobs. Clearly, a lot of upskilling in the area, which a lot of them would be unskilled labour, opportunities for local university students, internship and training. And we will be the first sort of modern certainly mineral sands mining operation in the country using modern standards. There is the government-owned Lanka Minerals, but that's been around since the 60s, and it is a little bit tired, and you wouldn't say that it was operating by modern international standards. So we're looking forward to being the leader in the industry, and we do think there'll be other opportunities as a result of that leadership. On the team, it's a pretty small team at the moment, but we're very much in the process of getting ready to build that out. So the board, tight board of 3 guys, myself and James Leahy, ex-stockbroker and now director on a number of listed companies, and Kwamwe, who represented the KLK, who is a major shareholder of the company. And we're looking at some other appointments there and keen to appoint some Sri Lankan representation on the board as well. And Ranga has been a long, loyal member, and he's our country manager. He's been here a long time and seen lots of ups and downs, and is now pretty excited about growing his team here. And we got James Mahoney, CFO, London-based, and Richard Stockwell, ex-Aluka, is the technical manager out of Perth and a great asset for the company. So very small market cap at 3p. Our market cap's only about $10 million. We're based on the 279 million shares. That includes that latest issue. And if you compare that to 155 million, which is over 40p per share NPV just on the base case, that market cap certainly, I think, has a long way to go. So in summary, we're ready to, we're in the planning mode. License, we've won the cancellation. Hopefully, we've got all the shenanigans of certainly the corruption behind us. Financing very advanced on that. Hope to move to definitive agreement very soon. Ton of upside in the deposit itself. Certainly a ton of upside in the current valuation, and I look forward to keeping you all updated and progress, plenty of news flow as we move through what you've seen as a lot of deliverable.
That's great, Greg. Thank you very much indeed for updating investors, and apologies for any audio interruption during Greg's presentation. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. Before Greg takes a couple of moments to review your questions submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, will be available via your Investor Meet Company dashboard. Greg, if I could ask you please to open up the Q&A tab. You'll see you've had a number of pre-submitted questions and a number of questions from investors during your presentation today. And I wondered if I may just ask you to read out those questions, and I'll pick up from you at the end.
Yeah, sorry, just going through some of those now.
Yeah, no problem.
Yeah, so has the port lease grant been applied for? I think I answered that, and that we basically had a lease agreed And they've now actually gone out for requests for proposals for other uses. And there are 2 other companies that not competitive use with ours. So we're actually welcome that. So we expect to see a fair bit more activity around the port. There is a question in the company countdown to production presentation on your website. It is shown that any offtake agreement will follow the port lease agreement. Given that an MOU has been signed, is it possible that an announcement regarding the JV could be issued first? Well, my focus is definitely on the getting the JV done as quickly as possible. The JV agreement is certainly a bigger catalyst for me than the port lease. I'm assuming the port lease is going to be more procedural than a huge catalyst. Somebody asked about the 12-month period between construction and production and the detailed engineering that's required. As I said, this is not rocket science, a well-trodden path. So, we're hoping to start construction certainly in first half of next year. Are there any limits on the depth you will be able to mine, or is that yet to be decided? Good question. At the moment, we are only allowed to mine down to the water table. We know that the resource goes beyond the water table, and that internationally it has been demonstrated in many places that you can mine responsibly below water tables. We're not pushing that yet, but we're just going to get in production and just build the confidence of the authorities, and then over time we're pretty confident we will be able to go down below the water table. Obviously it varies, but between sort of 3 and 5 metre depths. But we've got in some of the dunes, we've got drilling that finished in mineralisation at 14 metres, so and nowhere near the water table. So yeah, it's a good question, but as I said, our approach is going to be conservative and don't go too hard for the resource below the water table at this stage. Are there further areas in Sri Lanka to be developed? Yeah, there's no question there are, and there's a few ASX listed companies here. We know them well. We know a couple of private companies that we're talking to and staying close to. Clearly, at the moment, we don't have the current M&A is my background, but I'm certainly keeping an eye on them as we build the value in our currency. I think there's a great opportunity to grow in Sri Lanka, and with the backing of LB, I would expect that we would be able to add other projects. Can you confirm if the JV advance payments, if and when the JV is signed, will fund all exploration work without the need for future fundraising? Yes, look, that's certainly what the design is. I'm actually, have mentioned trying to accelerate some of that funding from LB even before we sign the agreement. There's obviously no guarantees that they are going to sign the agreement, but the signs are good, and certainly their commitment's been strong, and as soon as we got the licenses back, the re-engagement has been very encouraging. So I'm hopeful that we can do this without any fundraising. Are the production and finance forecasts net to CMET or need to be shared with the Chinese partners? So all of the numbers in this presentation are on a 100% basis. So you need to take out, it's not as simple as taking out just 50%. I mean, you could look at this and say they're funding 81 million and we've got half of it, so that implies a valuation of 160. That's one way, and there's no problem with that logic. But it's a little bit more complicated because we can start to access cash flow early, and they can't. They've got to keep going until they meet that hurdle of 1.65 million tonnes production. So it's not that simple an answer. But yeah, big picture is that presentation is 100%, not 50%. Is with somebody saying, now that we've ticked a lot of the boxes, and sorry, I'm paraphrasing your question, ticked a lot of the boxes. Is Capital Metals at risk of being a takeover target? Look, we've got a pretty solid shareholder base. We know them pretty well. And in the last raise, it was all of the money came from existing shareholders. And so, still solid support there. I'm not sure that any of these companies would jump in to Sri Lanka at the moment without our full cooperation. So to me, that's all about, if somebody wants to take us over, great, but it's got to be at the right value. I don't have any issue with that. We know there's interest there. There's no doubt. We have been talking to companies because naturally over the last few years looking at raising finance from a few alternatives. And as I said before, some of the bigger guys would like to see 50 million tonnes, and we're not there yet. This is my background. So I watch this space, I think. I don't think it's going to be imminent, but and certainly, with the JV with LB, I think that will probably deter some of the bigger guys from a takeover. But I know there are others that are interested. I think I've got through the questions.
That's perfect, Greg, and thank you very much to everybody for your engagement this morning. Greg, I know that investor feedback will be particularly important to you, and I will shortly redirect those on the call to give you their thoughts and their expectations. But Greg, if I may just come back to you finally, just for a few closing comments, just to wrap up with, and then I'll send investors to give you their feedback.
Yeah. Okay. Thanks again, Mark, and thanks for everyone for taking the time to sit through this. We're in a great position now. It's been tough, but it's so nice. The last 9 to 12 months was fight mode, and just all that lobbying mode and legal work. And now we can put that aside and work on building this project. And as I said, this is not the upside's always been there, and it's been up to us to execute. And now we've been given the mandate to do it, and I look forward to getting our hands dirty, rolling our sleeves up, and delivering for everybody.
That's great, Greg. On that note, thank you very much indeed once again for updating investors. Can I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Capital Metals PLC, I would like to thank you for attending today's presentation, and may wish you all a very pleasant morning.